Well, I agree that the focus of the discussion, should shift to the financial sector, because we've not talked about it too much now, and the single market in the financial sector, which of course Enrico Letta talked about this morning. So just before that, I just wanted to ask, because we haven't really spoken, we usually do at these events, we usually have finance ministers and so on, and we start speaking about fiscal deficits and public debt and so on. So don't want to ignore that, because while some of those issues have been addressed in some countries, obviously in some of the leading countries in the region, it's very much an issue that is to the fore. So I just wanted to ask you how you see that, and how much of a constraint that might be on doing some of the things that we're talking about here. Do you see much prospect of fiscal consolidation and bringing down the public debt, and is that in the next few years? Maybe Colin, I should ask you about this one.
Sure. I mean, we do look at deficits and debt quite a lot, obviously. I think our outlook for Europe as a whole hasn't really shifted much in aggregate over the past probably 12 to 18 months, where we see pockets of progress, and that's where I talked about some of the upgrades. We now have Slovakia, Spain, Portugal, Croatia are all A3 credits. That's a really good rating. And where you look at where they've come from over the past 10 years, the progress there is amazing. Greece is back in investment grade. We've seen progress. We've seen a lot of progress. And what matters for us is not just what's happening to the deficit and what's happening to the debt, but in essence, we're also trying to look forward so that if there was an issue, do we trust the governments involved to take the necessary steps to address those kind of issues? If there was a debt sustainability problem, would you see a policy response? We tend to call that institutional strength and governance when we think about sovereign ratings. And the big place where we're talking about that a lot right now is, of course, France. We still have a AA3 rating on France. It has a negative outlook, which means historically there's about a 1 in 3, maybe a 1 in 2 chance of a downgrade. But in essence, that is driven by our concerns about the ability of the authorities to implement policies to bring debt dynamics under control. And we also downgraded another small country this year called the United States of America, which was a very popular thing to do, for very similar reasons. Institutional strength, the ability of institutions and politicians that form governments to take the steps they need to take in order to address debt issues is incredibly important for us. And in some of these big countries like France, like the US, maybe even we could talk a bit about the UK, it's a little bit untested, and it's only really now we're testing it. Whereas when you look at Greece, Portugal, Spain, those countries that went through the crisis, it has been tested. And sometimes it was a bit bumpy, but they were able to pursue not just kind of structural reforms to liberate the economy, but actual outright fiscal reforms, spending cuts and taxation rises to bring debt dynamics under control. And I think if you look back at the kind of broader group of advanced economies, those that have made a lot of progress over the past 10, 12 years on debt reduction have something of a bit of a history of going through these problems. You're talking about Iceland, you're talking about Ireland, you're talking about the countries I've just mentioned. I'm not sure we've seen the same trigger to the same degree that's focused minds and built a constituency for sound public finances in the US or in France or in the UK, frankly. I mean, I really hope Liz Truss did it, but I don't think she did. I don't think there is a broad agreement and recognition among voters that sound public finances are a concern. And so we have a slight dichotomy where I can point to pockets of real progress, but there are also some big risks out there which may take a long time to fully crystallize.
Yeah. And you were actually talking quite a lot about risk-taking.
I was.
At the end of your introduction, which is not something the EU is generally known for in that respect. So encouraging, in fact, on the contrary, risk aversion seems to be the kind of dominant, leitmotif, if you like, in the EU. So I guess I want to ask the others what they what they think about that. But first of all, just coming back to the single market question, and obviously, Martin, you focused on that a lot. So what did you take from Enrico Letta when he was speaking earlier? And, you know, we've got this deadline now of 2028 to complete these 3 verticals, of establishing single market in finance, in energy, in digital tech, and so on. You talked about a few things that could start to make that happen, to unblock the full potential. So streamlined voting, majority voting, and revising, all this kind of regulatory mess. What else? I mean, and are you optimistic that this can happen by that deadline?
Well, I think that what we heard this morning is encouraging. I think that there are clearly, the initiatives are there. The Commission is working hard on it. So I think that that's encouraging what we heard this morning. In the end, it will be up to the member states, right? So it will be up to political will of the member states, and that's where the issue is. But given that the Council agreed, on that strategy, I think that that's an encouraging sign. So I'm cautiously optimistic that will make progress. That we'll see further progress on that.
Yeah. I may ask the others as well, Hana and you, what's your view, Miljan?
I mean,
this is your field, in a way.
Indeed, and I think what has been said, a lot of progress has been made up to now, particularly because we are in Croatia, and I'm responsible for this part of Central Europe, particularly Croatia. I think if you look at how even though maybe these days EU doesn't look like an easy place to be, it has meant a lot, particularly for this country. If you look at convergence into the national income, if you look at stability, if you look at investment rating, macros, labor market, banking. I mean, I have a colleague here responsible for financial institution. 10 years ago, you could not even raise M&A, let alone go into some R&D financing. It was like maximum, you pull a couple of banks, you get 200-300 million euros. Today, we have very much well-capitalized banking sector, which is a key pillar. Lowest NPL, I think, probably in Croatian history since independence. So this helped, and we have ECB as a common regulator. We have major international banks. Now, how do you move forward when you are now having, on one side, we are not immune, obviously, given that Germany and France as a 2 engines are in what situation what we are now. We have average tariffs being raised by the states, and we have what was said today on the US, on the China side, where there is really pressure. We see it when we want every single renewable energy project we finance today, irrespective whether it's of every part of the hardware is coming from China, and we see. So I think from now, what do we do? There is not enough. I mean, we have great with the European Commission on InvestEU, risk mitigants. I think what we need to be more clever is really you cannot have even one. Let's say Zagreb and Ljubljana stock exchanges, they have diverging rules. So we have capital markets has to be, number 1 priority in any sense. I think progress has been made in terms of the private equity, where there is a lot of European money being poured into it, including ourselves, institutional investors and retail investors. Let's face it, there is a lot of retail investors' money that has not been utilized. I think this is something, if you really want to step up in terms of the, but for that, if I want to, as an e-citizen, click on my app and put some money into 3 IPOs that happened this year in Croatia, I would like to do that also when the Romanian SME is going public. I think this is, and then the last thing, which is even more challenging, is the venture capital. I looked at the data on the unicorns. This country had 2 unicorns, but there are 1,400 unicorns globally. maybe, I don't know, well, I'm just maybe sorry if I make mistakes, probably 3/4 are overseas. And in our region, we have, in our region, compared with other regions, we have only 2, and 2 are in Croatia. We can be proud of that. But without those, going really capillary in terms of the accepting, and we have a population where it's a political now debate. First of all, you cannot just even do target immigration because nobody politically or socially will accept it institutionally. But we need to, how you're going to innovate and digitalize and autonomize SMEs without having right financing tools. And I think that's, to me, that's the challenge number 1. We as institutional play a role because we are very much private sector focused. And I think if we manage to do on the capital markets and on the venture capital funds, the same success what has been done on the core banking sector, I think we are on the right path to tackle these 2, to support and accelerate energy and digital pillars. Otherwise, I don't think so we can do it with the public money, and irrespective of how much money you will put, because simply you have public financing, except for few examples, including Croatia, worsening. And now, in terms of the real wages growth, these are non-discretionary items. So then you're even becoming much more vulnerable. So relying on the public sector money is really not an option. So.
Okay, so well, let's talk about that, the financial instruments and mobilizing private investment. I mean, is there appetite really for regional stock exchange? Is that a good way forward or not? Is it a non-starter? What do people think? Hana, did you want to come in on this?
Maybe not specifically on this, because as you know, this is under discussion, this particular one. But I would just agree in terms of, I think there's an awareness of the benefits of a higher integration, and I think we're finally discussing some topics which were untouchable. As during the COVID, it was never discussed whether, or it was seen impossible that the EU would have a common debt. We have it, and we raised it. It was done in the end fairly quickly. In the same way as it was said, I think now we're having a discussion how to integrate more in the single market, the capital markets union, the savings and investment union, and I think we still have a long way to go, but this is the type of the discussions that we need to have and are having already. So this is why, just to underline also the optimism from my end.
Yeah. Martin, did you want to go on?
I think we have to start with the savings side first. We know we have vast savings.
Yeah.
We have vast savings in Europe, but we know that most of those household savings end up in the banking system, right? So we know that 1/3 of the financial assets of European households are held in deposits and cash, and that number is something like
or real estate, like here, and then you have unaffordable housing,
yes.
Then you cannot retain the talent, let alone attract.
So much more in the banking system than in the US, right? So, and that is because of, it's expensive, it's opaque, and I think that's the starting point. For example, by putting more emphasis on developing funded pension systems is one way to develop that sort. So, and then we come at the second stage, which is getting out of that home bias and channeling those savings across Europe. And we know that 60% of household investment, those that do invest, that 60% they invest in their home country in Europe. So that's definitely a second issue, and that relates to the issues I've mentioned about 28th regime, mutual recognition, about the capital markets union. And then, of course, we have the final phase of that, which has to do with, do those funds reach the small companies that need the funding? So there are 3 phases here, and I think you need to talk about all 3 of them to really, to establish that mechanism throughout Europe.
Yeah, I'm going to got the last 20 seconds, 20 seconds, Colin, to maybe talk more about risk-taking and.
Okay. I mean, I'm not allowed to give policy advice, so I'll try and phrase this quite carefully. But here's one example of a risk. If all of this happens and we get a pan-European capital markets union, that's wonderful. And as a relatively small EU country like Croatia, you have a choice. You can wait for that. Or you can do things like pension reform, and you can do things like retail investment accounts, and you can do things like restructure your insolvency process. I'm a credit guy at the end of the day, right? That's a critical part of all of this stuff. And you can do all of that now, right here. Because Sweden didn't wait for the rest of the EU to establish deep domestic capital markets. It would be great if that happened at the European level, but it's not a requirement. You have a choice as policymakers of whether you try and do what you can within your own sphere first.
Thanks. I think that's a nice place to end. Back to General Sanders' point about agency. You know, that all these countries are member states and, you know, are part of this club and following these rules, but actually doesn't mean to say that you still, as governments and institutions, you still don't have quite a lot of agency and scope to, you know, there's certain things that are within your control to actually do something with the stroke of a pen even to change legislation and so on. So yeah, I think agency, I'm all for it, and we need more of it, I think, in the EU. So thank you very much indeed. That's all we've got time for. We've got an energy session now. Please join me in thanking our speakers.
Thank you.